I'm Jessica Minton for IB Times TV, and I'm joined by Kenneth Polcari from O'Neil Securities, and he's going to weigh in about the latest economic data coming out of the globe, as well as a preview of next week's economic calendar. Kenny, thank you for joining us.
Thank you for having me.
My question is, basically the U.S. manufacturing numbers came out pretty good, but in Europe and China, not so much. And now unemployment in China has hit another all-time high. With the ECB having a meeting next week, do you expect to see any sort of stimulus or any sort of monetary policy?
Listen, I expect to see more of the same. I think Mario Draghi on Wednesday, I believe, after that Italian vote and kind of disruption it created in the markets around the world, by the way, he came out and reiterated the stance of the ECB that they are not going anywhere. They remain accommodative. I don't think that means anyone's cutting rates. I just think that, like the Fed, they're going to continue to sit there and stimulate their economy. The same way that Ben Bernanke assured us on Tuesday and Wednesday during his Humphrey Hawkins testimony that he's not going anywhere either. So any speculation that the Fed is pulling out or withdrawing early has certainly been put to rest, at least for now.
With China's manufacturing, it didn't necessarily fall below those contraction, that level, but it still didn't beat estimates. And with the BRIC countries, India is really the only one that's kind of seeing some sort of growth right now. And then a report came out that U.S. companies in China saw another decline in profits for the second year in a row. So they're going to want to take that and bring it back to the U.S. Right. So my question would be, with less foreign money flowing into China, how will this end up affecting them over the next decade?
Well, listen, that's kind of a loaded question, right? Let's just say bringing work and employment back to this country is not necessarily a bad thing, so it's good for us and not necessarily good for China, right? But I suspect is what you're going to find is as the global economy once again starts to stabilize, and I think we're going to start to see that towards the second half of this year into next year, then I think this conversation is really going to be more moot, because I think it's a temporary situation, right? I think that China's on a path to grow. If you've been over there, you see there's cranes and building going on everywhere, which indicates that they expect certainly much more urbanization and much more growth in that country. So I think that's a temporary situation in terms of their PMI numbers and what this means in the short term. I think you have to look much broader. So I suspect that I'm not sure that outflow of money is going to continue, is what I'm trying to say. I think that once it stabilizes, then the equilibrium will settle in again, and the emerging market countries will do well.
And finally, a preview of next week's economic calendar. We do have unemployment coming out, China's beige book, and then other central bank meetings. What do we need to be keeping our eye on?
I think you got to keep, in this current environment, I think you got to keep it on everything, right? You got to have a very broad global look. You've got to watch each report as it comes out of the different regions of the world, just to kind of see. Today, we had negative data out of Europe. We had some mixed data here in the United States. We had mixed data out of China again. And I think as we're now not in earnings season, we're past this sequestration thing in the United States, is that now you've got to start paying attention to the macro data. So every day the macro data is going to be important, but you have to kind of put it all together and see if it's all moving in the right direction. That's going to be really the key. And certainly in this country, I think non-farm payrolls are going to be next Friday. That's going to be a chatter all week next week, because it's going to want to show job creation. Now, that being said, we hit the sequestration thing today, so you're going to start to talk about job losses again. So there's going to be speculation on what the number means versus what it's going to mean in the future and where are we really going. And listen, if you look at the market's almost near new highs, and so the market's kind of avoiding or it's discounting sequestration. It's not getting very concerned about potentially what that means. And the truth is, I think that they're making so much more of it than it is. Now, if you happen to be someone who's losing your job, maybe not. But on the whole, I think that, and the market's telling you, I think that they're making more of it than it is.
Thank you so much for joining us. It's always a pleasure.
Thank you very much.